Hello traders. Welcome back to another video. In this video, we will be going over a beginner's guide to support and resistance. Let's get right into the video. Start by adding trusted signals to your charts. Click on the FX indicators button at the top of TradingView, then click on invite only scripts. Click on trusted signals. Now that we have trusted signals on our charts, let's learn about support and resistance. Support and resistance is one of the most widely used concepts in forex trading. Strangely enough, everyone seems to have their own idea of how you should measure support and resistance. Let's take a look at the basics first. Look at the diagram above. As you can see, this zigzag pattern is making its way up a bull market. When the price moves up and then pulls back, the highest point reached before it pulled back is now resistance. Resistance levels indicate where there will be a surplus of sellers. When the price continues up again, the lowest point reached before it started back is now support. Support levels indicate where there will be a surplus of buyers. In this way, resistance and support are continually formed as the price moves up and down over time. The reverse is true during a downtrend. In the most basic way, this is how support and resistance are normally traded. Trade the bounce. Buy when the price falls towards support. Sell when the price rises towards resistance. Trade the break. Buy when the price breaks up through resistance. Sell when the price breaks down through support. A bounce and break. Say what? If you're a little bit confused, no need to worry, as we will cover these concepts in more detail later. Plotting support and resistance levels. One thing to remember is that support and resistance levels are not exact numbers. Oftentimes you will see a support or resistance level that appears broken, but soon after find out that the market was just testing it. With candlestick charts, these tests of support and resistance are usually represented by the candlestick wicks. Notice how the wicks of the candles tested the 1.4700 support level. At those times it seemed like the market was breaking support. In hindsight, we can see that the market was merely testing that level. So how do we truly know if support and resistance were broken? Some argue that a support or resistance level is broken if the price can actually close past that level. However, you will find that this is not always the case. Let's take our same example from above and see what happened when the price actually closed past the 1.4700 support level. In this case, the price had closed below the 1.4700 support level but ended up rising back up above it. If you had believed that this was a real breakout and sold this bear, you would have been seriously hurten. Looking at the chart now, you can visually see and come to the conclusion that the support was not actually broken. It is still very much intact and now even stronger. To help you filter out these false breakouts, you should think of support and resistance more as zones rather than concrete numbers. Now that we have a good understanding on what support and resistance is, let's look at a live example to practice. In this example, you can see we are on the 3-minute chart. Now let's start to mark up our support and resistance zones. After that we will look at price action and market structure. We can see a support zone at this level. We see price reject and trade to the upside, giving us higher highs and higher lows, which is the sign of a bullish market. Price then breaks above this level of old resistance and now holds it as support. Price continues to give us higher highs and lows. We then approach price where it has previously reversed at. When price reaches an area like this, you want to take caution and make sure you read structure and price action to figure out if it is breaking above resistance or if the resistance will hold. We can see price rejection off of this level of strong resistance. We can then see a break of structure. We know this because price failed to print a higher high and instead printed a lower high. As we know, Lower highs and lower lows are a sign of a bearish trend. We can see price then break this support level and then come back to retest the newfound resistance. If you understand market patterns, you can also see that we have a head and shoulders pattern with a break and retest of the neckline. We enter the trade, with our stop loss just above the level of resistance and our take profit level set to previous levels of support. As you can see, we have a winning trade. If we turn Trusted Signals indicators on to check our chart, we can see that all the levels we marked were also marked by Trusted Signals. Leave a comment down below and let us know what videos you would like to see with Trusted Signals. If you have not purchased Trusted Signals, the link will be in the description below. Be sure to take advantage of that if you haven't already, because Trusted Signals is on sale and you don't want to miss out. Okay traders, that is all for today's video. Make sure to like and subscribe so you don't miss any future videos. Be sure to join the Discord group where we hold giveaways, learn, and profit together. All links for Trusted Signals will be in the description below. Thanks for watching and I will see you in the next video.